Hello, everyone. Thank you so much for joining us yet again on our Mortgage Minute with Linda May of Scotiabank, Home Financing Advisor, El Professional with Scotiabank. I'm Alex Ward, broker owner of Maxwell Devonshire Realty, and we are here today. Well, I'm here today to learn from Linda May as she discusses the third C in credit, which is capital. What does it actually mean? How do you actually prove it? And what does it really impact on your mortgage approval? So, Linda May, the floor is yours.
Hello, everyone. So I wanted to discuss obviously the five C's of credit. We're three into them. So the first one was credit, which we've already talked about. Second one was capacity, which we discussed in the last video. And then this third one is capital. And what capital is how much down payment. So how much skin do you have in the game when it comes to purchasing your home? Um, you can put really anything down you want, but there's really two kind of options that make a difference as far as whether a mortgage is insured or it's conventional. So a conventional mortgage means that you're putting a minimum of 20% down, and an insured mortgage means you're putting anything less than 20% down. So if you're putting 20% down, as far as Scotia is concerned, we need 30 days history on that money. So we need to know where that money's been for the last 30 days. If you're putting less than 20% down, we need a 90-day history. A lot of times, I get asked why we need a history. Well, it's a federal regulation, so it's actually not something that I can change, or actually any of the financial institutions can change. We have to abide by the federal law and confirm down payment. So things that are acceptable for down payment, one is gift letter. So if your parents or um, your sister or brother is gonna gift you some money for a down payment, that's completely fine. We would just need you to sign a gift letter, and confirm that they have the funds. You can also take it out of your RSP. If you're a first-time home buyer, you can take it out of your RSP if you're not a first-time home buyer, but you are going to have to pay the tax on that. Tax-free savings account. It can come from like employment deposits. We would just need a 90-day history on that, showing that the funds have been in the account for that long. And even if you haven't accumulated all the funds over the 90 days, we have to show where that money came from. I've seen people, sell assets in order to accumulate a down payment. That's fine as well. We just have to have a sale agreement for that. So as far as capital, it does play a big part in the application. If the capital or the down payment isn't acceptable by the bank, we can't authorize the approval on the mortgage. So it's another big piece to your five C's of credit. Hopefully that was helpful for everyone. Um, yeah, that's really all I have, Alex.
Yeah, well, that's pretty big. So yeah, make sure that which is why when you're looking at doing a pre-approval or looking at buying a home, it's so important to speak to a professional before actually going out and writing that offer to ensure that you actually have the capacity or the capital or the credit to be able to approve for that mortgage. Because there's nothing worse than having that emotional high of thinking you're getting it and then losing it. So I'm Alex Ward, broker owner of Maxwell Devonshire Realty. You have been listening to the Mortgage Minute with Linda May of Scotiabank. Thank you so much, and we look forward to seeing you next week. See you, everyone.
Thanks, guys. Have a great